What's going on, guys? This is the very first episode of the Investing Thunderdome. My name is David and I'm super excited for the journey we're about to go on. This video is going to be focused on 3 stocks that I think everyone should be monitoring throughout the rest of 2025 and even into 2026 as it concerns biotech. But before we get into the meat and beans of this video, let me tell you a little bit about myself and the reason that I'm starting this channel. My name is David Gibson, I'm 22 years old, and I'm a lot like you guys. I started this channel because I don't think everyone should be settling for the 8% returns and just hoping for the best. So then you could be asking the question, what is the goal of returns of the Investing Thunderdome? In which I would say, it is 100% a year. It may sound crazy, but that's kind of exactly what we're going for here. So without further ado, let's get into today's video. The reason I'm focusing on 3 stocks today is because in the Investing Thunderdome, that's all we're going to be carrying at one time, is just 3 different stocks. No diversifying into 30 other stocks and all this fluff just to try to recoup on losses and try to get your winnings back. No, none of that. None of that. 3 stocks, that's it. We're focusing on high conviction, high upside plays, mostly in bio stock, but I'm gonna sprinkle some other things in here and there. And it's gonna be mostly biotech because that's where I believe the biggest opportunities are. So with all that out the way, I'm gonna go into what the Investing Thunderdome mindset is and what these 3 stocks are. For the Investing Thunderdome, I've come up with 4 different principles. The first is conviction over diversification, which is something I kind of hinted at earlier. We don't want safe stocks, we want transformative. We're not going for that 8%, we're going for the 100. If a stock that I'm buying into doesn't make me feel like I'm stealing it, then I'm not going to buy it. That goes for any stock. And like I'm going to continue hammering over and over and over, it's only 3 stocks. And then those 3 stocks, we master it and we go big on our best ideas. Principle number 2, no margin ever. These stocks can be highly volatile and are very often shorted, so margin will just add gasoline to the fire. We keep our emotions and risk under control by only using cash. Principle 3, weekly showdowns. This is one of the most crucial principles. Every week we reevaluate our stocks. If another opportunity comes to light and it looks better than what we hold, we just swap it. And that's the entire concept of this channel. The weak get kicked out and only the strong survive. It's brutal, but hey, that's why it's the Thunderdome. Principle 4, biotech is the battlefield. Biotech is where you find the asymmetric upside. Biotech is as intense as it sounds. It's betting on breakthrough science, saving people's lives, trying to build generational wealth. It's a pretty big deal. Okay, you got that? 4 principles established. Now let's get into the stocks. So here we go, stock number 1, Anavex Life Sciences, aka AVXL, aka Mad Max. This is my number 1 stock on the list, and I think it's for good reason. Anavex has a drug called blarcamesine that targets the sigma-1 receptor to slow cognitive decline in Alzheimer's and other neurodegenerative diseases. They submitted their EMA approval application back in December of 2024. If approved, it will be the first drug in its class, which is absolutely massive. It's a once daily oral tablet, easy to take, clean safety profile, no brain swelling risks, and no complex infusion protocols. The phase 2b and 3 trials showed a 36% slowing in cognitive decline overall, and nearly 50% for patients with the sigma-1 wild-type genotype. Brain imaging confirmed that there was less brain volume loss compared to the placebo. But here's the real kicker. Anavex has 25 million shares short out of only 85 million shares outstanding, and the daily volume is low, which means it would take almost 2 months for shorts to cover if they all try to exit. When Anavex answers the EMA's first round of questions without withdrawing their EMA application, shorts will be forced to run to the exit, which sets the stage for a potential short squeeze. But the market opportunity is massive, which is what we're all about. An estimated 112 billion total addressable market across Europe, the US, and even more additional countries. With just a 3x sales multiple, that translates to over $330 billion in market cap potential. Currently trading at just $9 to $10 a share, Anavex Life Sciences could realistically hit $330 in just 1 year if everything goes well. So let's give it some scores. Drug power, 4 out of 4. Market size, 4 out of 4. Like I said, covering Europe, covering the US, and even additional countries, the market size is huge. Management execution, 3.5 out of 4. Approval risk, 3.5 out of 4. Okay, so let's get into our second stock now, which is Verona Pharma, aka VRNA, aka Master Blaster. Verona Pharma is transforming COPD treatment with ensifentrine, which is a drug that's already FDA approved and is gaining momentum as we speak. COPD patients struggle to breathe and exacerbations can be deadly. Here's a few ways in which ensifentrine helps. It reduces exacerbations by 40%, which means fewer ER visits and hospitalizations. It improves lung capacity by about 6%, and it offers anti-inflammatory benefits which may aid in the lung healing process. The COPD market is huge, and every 1% of market share equals $1.1 billion in sales. Though the patent for the drug itself expired, Verona owns the patent for their novel nebulizer delivery, which gives them a competitive edge. It is shot way up to over $90 a share, but with increasing adoption and strong clinical trials, the runway remains long for Verona. At the time of this recording, Verona was actually just sold on the morning of July 9th, 2025 to Merck. The deal offers shareholders $107 per share and a 23% premium over Verona's recent closing price. The acquisition marks Merck's largest since 2023 and is expected to help them become a global leader in advanced respiratory care. I'm going to go ahead and pop up a picture of my own Robinhood account just so you guys can get an idea of how Verona went for me after I bought in just before their phase 3 trial at almost $15 a share. As you can see, I made over 600% returns over the last year or so. So you guys can see why Verona is being mentioned in this video and why it's a driving reason as to why I'm creating this channel. So let's give it some ratings, shall we? Drug power, 4 out of 4. Taking into account the clinical results of the trials, the approval, and the COPD patients that have been already put on the drug, I think the drug's power kind of speaks for itself. Market size, 4 out of 4. Like I quoted before, 1% of every market share is equal to $1.1 billion in sales, which is absolutely massive. Management execution, 4 out of 4. Considering ensifentrine is already FDA approved and the drug's launch has gone pretty smoothly, I give them an A+ in this category. Stock number 3, and probably the most interesting stock on our list for today, Iovance Biotherapeutics. Iovance offers an FDA-approved cell therapy for metastatic melanoma, using tumor-infiltrating lymphocytes, TILs, to stimulate the immune system. It achieves durable responses in about 20% of patients that have no other options. So about 1/5 of patients that have nowhere else to go are receiving durable responses from this therapy, which is huge. The treatment itself costs $550,000 per patient, but has struggled recently with revenue misses. But I see this as a one-time hiccup because it's just logistics and trying to figure out how to get this therapy to the patients. I don't see this as an issue with patients that want or need the therapy. I think it's the other way around. I think the issue is getting the therapy to the patients that need it. And I do believe Iovance will eventually get to the point where they can solve that problem. But here's the twist with Iovance. The company also has promising lung cancer data with similar response rates. So what's the biggest upside with Iovance? Moving the therapy earlier in treatment lines. I think if Iovance were to do this, they would see success rates skyrocket to 40% or even higher. Currently, Iovance can only treat a few hundred patients per year, but the market potential includes over 70,000 metastatic melanoma patients alone, plus many more if lung cancer approvals come along. Trading at just $2 or even less right now, I don't think a $10 share target is that unreasonable with the right execution. So let's give Iovance some rankings. Drug power, 4 out of 4. Market size, 4 out of 4. Approval risk, 4 out of 4. But here is the issue. It's management execution, which I have at a 1.5 out of 4. Management execution has to be low for me with Iovance because of the failure in execution thus far. Iovance having the issue of getting their therapy to the patients and not the other way around, as I mentioned before, is not the path that they want to be walking down. But that's the Investing Thunderdome lineup for today completed. 3 high conviction stocks with real game-changing potential. We don't play it safe, we go big or go home. Owning just 3 stocks with a conviction to deliver 100% annual returns. Keep your eye on these names, the Thunderdome is just heating up. Thank you all for watching until the end. If you like this kind of content, make sure to like and subscribe, and I'll leave you with this. Welcome to the Thunderdome.